Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's take a look again on the technical picture of the gold market. And actually, by looking at the charts right now, you could see what a great guys we are. So actually, we have prepared a great plan. Everything goes with it. And well, today we just could discuss chances for entry, where position might be taken if you hadn't taken yet yesterday and days before. And I will show you once again why I'm mostly the follower of idea to taking position in parts, not to catching the precise reversal point, which is might be great, of course, if you get it. But as you understand, odds stands not in your favor. And that's why my experience tells that if you're sure with the direction or in an area where you're generally ready to take the position, especially if you trade on the high time frames charts, it's always better to take position in chunks. So for instance, you split your trading lot in 5 parts or 6 parts if you trade the big lots or you have a lot of assets on your account. And with this approach, you should get at least not maybe 5, 6, but you could get at least 2, 3 entries if you will see the early reversal. If everything goes with your perfect plan, then you will get all 5 or 6 entries if you're taking position on with the lots on the 15%, 20% of your whole lot. So, and today's situation just confirms this approach, that it shows why it is maybe more preferable. But this, of course, is up to you. It's just I'm sharing with you with my view. So what we have on a daily chart. Yesterday we said that the vital point. Market has to get the whole prices or collapse. You can see right from this support area we have the bounce, and market has formed the bullish reversal candle. It's great for position taking because it's clearly specified where we could place our stop order. So this will be kind of the invalidation point just below this area. It's based on a daily chart. On the full time frame chart, you could see that market briefly has not reached the target with the 33. And that particular why we said even in the weekend that we expect the drop below this area, but we do not expect that precisely will be 33. It might be somewhere in between 33, 20 area. And we said if you intend to take position, it's better to split it in parts. That shows why we every time talk about this. If you would watching and trying to catch this particular level, you probably now would stand without the position. So, but this is not the actual reason to be upset. Nothing is lost yet, everything is just started. And today you have great chance for another entry with even smaller potential loss. I am speaking about the hand and shoulders pattern on the hourly chart. This is our butterfly, it's 127. Yesterday we said let's keep watching, maybe market will reach 1618. So you will be able to take another part of your position. It precisely agrees with the 33 target of the ABCD. But this hasn't happened. As a result, we have upside reversal swing. You can see that this swing up actually greater than this one. That's why it calls as a reversal bar on the daily, because this is precisely the daily bar. Now you have hand and shoulder shape. This butterfly very often becomes the part of it. And we're precisely at the bottom of the right arm. So that's the point where you can take the position. Additionally, you could see that market is retesting of the broken wedge pattern. So wedge pattern is also broken up. So this is great opportunity. If you haven't taken position yesterday here, that's another point where you could do this. Besides, you could try, if you really do not want to risk too much with this situation, well, you could try to place really tight stop just below the right arm. If you will see market drop here, you could wait. Your loss will be very small in cash. You could see what will happen. Maybe it will keep going lower. Not know. But this is definitely great opportunity for now. Another pattern might be formed later. For example, if it will be with this kind of the hand and shoulders, it also might happen. So market will this left arm, the head, and might be right arm will be formed a bit later. But entry point approximately will be the same. So from this standpoint, I wouldn't ignore this setup that we have currently, because if market and when it will come to the neckline of the next pattern, if it will be, you already will be in profit. So you could lock your position with the break-even stop and just see what will happen. So it's definitely the point to consider, an overall setup to consider. What about the risks? Whether market would try to drop down to the 33 and still to complete this ABCD pattern. Well, we can't ignore it totally. Theoretically, it is still possible. Who knows what will happen, especially what Jerome Powell will tell on its conference in Jackson Hole tomorrow. Everything is possible. But based on the technical picture, what we see here with the reversal swings, currently, I wouldn't say that well, this risk is currently stands too high. So maybe this could happen, but this is not the reason to ignore the current situation with the hand short expansion, I suppose. If you trade on a daily chart and you're based, you trade here, you place stop below this reversal candle, and you're prepared for a big upward action. If this is your trading setup, yes, of course, you have to place your stop below the 33 definitely, because for daily chart it will not be big actually changes. So it will not be some failure or breakouts or breaking of the actually some context that we have. So on a daily, yes, you have to hide your stop somewhere below this area, let market to breathe. But if you trade on an hourly and you consider this setup for a possible position taken, you do not need to hide your stop below the 33 because it will be too big for intraday trade. And you're trading particular pattern. So for this point, it would be better to, well, maybe place stop below right arm slightly lower, but not too far. In this situation, your risk reward ratio will be small and not attractive. So that's actually all for now as a bottom line. Upward action started, we have clear bullish signs, multiple breakouts has happened on intraday charts, and today you see the second chance for entry. If you missed this opportunity, you haven't accumulated the position where we suggested, that's another chance. With the retracement, market stands the right arm of this minor pattern, that could trigger in any moment. So decide whether it's worth it to deal with it or not.